Oh my god, Tesla missed their delivery target. The stock's gonna plummet. Sell, sell, sell. I'm kidding. Technically, Tesla did miss their delivery target, but there's absolutely no reason to panic. My name is Matt, and in this video, I will be discussing Tesla's 2020 delivery report, and I will also be sharing where analysts think the stock will be going in 2021. Also, if you want a trading plan for the upcoming week, make sure you stick around until the end because I will also be doing a full technical breakdown of Tesla stock where I highlight the key price levels that will be in play. I really think you'll enjoy what I have in store for you, so let's hop right into it. It was just reported that Tesla fell shy of its 500,000 vehicle delivery target after record fourth quarter. Tesla met its 2020 goal of producing at least 500,000 cars, but narrowly missed its aggressive delivery target following a record year fueled by China demand for its Model 3 sedan. Tesla delivered over 180,000 vehicles over the past 3 months ending in December, which was a 61.2% increase from the same period last year, and that brings its yearly total to 499,555, which means it was just short by 450 vehicles. Tesla's year-end production total was pegged over 509,000 vehicles, which was a 71.4% increase. Wedbush analyst Dan Ives said that the 500,000 delivery target was not even on the map for the street going back to the late spring/summer timeframe, and forecast deliveries of as high as 710,000 for the current year, which would be a 40% growth rate, would put Tesla on a strong growth trajectory into 2022. He continued by saying, clearly competition is increasing across the board on the EV front with a slew of domestic players in China, Europe, and the US going after Tesla's core EV stronghold, although we believe the market is growing at a brisk rate that will yield multiple winners going after the EV jackpot. In other words, we don't have to debate between Tesla and NIO, we could simply invest in both. All in all, Tesla somehow managed to hit its production goal, but it did technically miss its delivery target. With that being said though, I do believe that the stock market will count this as a win. When Elon first came out with these goals, people literally thought that he was insane, and the fact that Tesla came within 0.1% of hitting all of those goals is definitely a win, at least in my book. Let's see what the Wall Street analysts are saying. With Tesla's amazing growth over the past year, it's not much of a surprise that the stock price surged by 740%. Here's where 5 analysts say the shares are headed to next. First up to bat is JP Morgan. They, for a long time now, have been negative Nancy's when it comes to Tesla. Currently, their rating is underweight, and their price target for Tesla is $90 per share, which would be an 87% drop. They believe that Tesla stock is, in our view, and by virtually every conventional metric, not only overvalued, but dramatically so. Honestly, this prediction makes absolutely no sense to me. I would argue that their fundamental analysis is clearly antiquated, but what do I know? I'm just a YouTuber. Goldman Sachs has a neutral rating and a price target of $780. Wedbush Securities, which is where Dan Ives works at, also has a neutral rating, but they have a price target of $715 and a bull case price target of $1,000. Heading into the year end in 2021, we are seeing major inflection of EV demand globally with our expectations that EV vehicles ramp from about 3% of total auto sales today to 10% by 2025. With Tesla being the leader in the EV sector, it will most likely disproportionately benefit them, and I've even read a few reports saying that this 10% number might be a bit too conservative. CFRA Research has a hold rating on Tesla and a price target of $750, and finally, RBC Capital Markets has a price target of $339, which would be a drop of more than 50% from current levels. So basically, 3 of these analysts are bullish on Tesla, while 2 of them are bearish. Now, unfortunately, I don't have a crystal ball, so I can't tell you the future, but I am personally bullish on Tesla. I really think that the company's growth has been pretty phenomenal, and so has the growth of the overall EV sector. And even if I weren't bullish on Tesla, there's no way in hell I would ever bet against it. Tesla short sellers have lost $38 billion throughout the automaker's colossal 2020 rally. When it comes to investing, I've found that it's much easier to go with the flow. So even if I didn't think that Tesla's fundamentals really justified its stock price, I wouldn't bet against it because the stock has a clear amount of bullish momentum. Speaking of which, let's check out the charts. In classic Tesla fashion, the stock closed the year out with quite a bang by hitting a new all-time high of $719. The stock is currently just below 706, and across all of the major timeframes, the stock is clearly in the green, and from the start of the year until now, it is up 743%. In the world of stocks, when one is plummeting, people say not to invest because it's like catching a falling knife. I think that Tesla's in the opposite position. I would say not to short Tesla because it would be like trying to catch a rocket ship. This is the current technical situation that Tesla is in. For those of you who are new to the channel, here's a quick recap of what's been going on. The last major relative high came at the start of September. That was just above $500, and it came right after Tesla went through a 5-for-1 stock split. Unfortunately, when that went through, there was actually a sell-off that eventually found support at 328, and from there, the stock continued to ping-pong back and forth, and we ended up getting the formation of this triangle, which is also referred to as a bullish pennant. This did lead to a breakout, and then we had a pretty boring 6-week period where the stock was hemming and hawing back and forth, and then in mid-November, it was announced that Tesla would be included into the S&P 500, and as you can see, this sent Tesla straight to the moon. From the point of the announcement until now, Tesla is up an incredible 71%. Or in other words, in a month and a half, Tesla outperformed how most stocks did in an entire year. Anyway, back to the technical analysis. There are two key things that I would like to bring to your attention. First is not only did Tesla manage to hit a new all-time high, but it was on a nice technical breakout. We got above this trend line and the previous relative high from December 18th, which was at $695. This close marks the second close above both of these levels of resistance, so there's a good chance that they could turn into support as we move forward. With that being said though, I would like to bring your attention to what's going on in the RSI. If we take a look at the last 3 relative highs, December 8th, December 18th, and then again December 31st, even though Tesla continued to move upward, the RSI didn't. This is referred to as bearish divergence, and it means that there's less buyer strength here than there was here and here. It's commonly indicative of a future decline or at least a period of consolidation. Moving forward, the ideal situation for Tesla would not only be for it to hit new all-time highs, but we would like to see it bring the RSI with it so it can get above 71 and 79 so we can get rid of this bearish divergence. In my personal opinion, at least as things currently stand, I believe that this bullish breakout is more important than this bearish divergence. I would recommend paying attention to the next psychological level of 725, but I think there will be a major magnet up to 750. From the most recent close to get to 750, that would be a gain of 6%. On the flip side though, if Tesla did put the cart before the horse, you should know the closest levels of support. First of all, I would watch the key psychological level of $700, which is very close to the support of this previous resistance and also this trend line. If the bear camp somehow pushes the stock through that, that would then set up 654, and past that, we have 608. Once again, I do believe that scenario number 1 is much more likely, but if scenario number 2 were to play out, I personally believe that buying shares of Tesla as close to this trend line as possible would be a great long-term investment. Now, to get a better idea of what Tesla might do over the next few trading days, let's check out the 4-hour chart. As a quick reminder, if you enjoy this type of content, it would be greatly appreciated if you could drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All of that support really helps me to keep going. Okay, back to Tesla. So from mid-November up until the start of December, Tesla was in this upward channel, which is also referred to as a bear flag, and that's because they commonly break downward. Eventually, support was found at 541, and from there, the bull camp tried to get the stock back into this channel on 3 separate occasions. On the 3rd attempt, it was officially rejected, all the way back down to 566. Since then, the stock has been grinding higher in a pretty nice fashion. We're seeing higher highs and higher lows. All this action has clearly been bullish. I mean, geez, Tesla just hit $719, and when you take the stock split into account, at the start of this year, it was trading below 100. But this does showcase the bearish divergence that I was talking about. If you take a look at this high from December 8th and then the newest high, Tesla has gone up, but the RSI hasn't. If for whatever reason Tesla doesn't continue to push higher here and bring the RSI with it, this could set up a decline to the supports of 695, 658, or 608. In reality, I don't think that this would be a bad scenario because it would allow us to invest in Tesla at a cheaper price, and once the RSI has a chance to cool off and a new foundation is built, we would have everything set up for the next leg higher. Obviously though, because of how Tesla has behaved in the past, I wouldn't be surprised at all if it just shoots up straight from here. Once again, the first two levels of resistance I would recommend paying attention to would come at 725 and then 750. And in terms of support, I will personally be watching how Tesla reacts to 695, which could also align with this trend line. These levels of support and resistance will definitely be in play over the next few trading days, but make sure you're also watching this divergence in the RSI. I would love to know your thoughts on Tesla in a comment below. Personally, the delivery report doesn't really bother me, and I'm still bullish on the stock. I would like to know your price target for Tesla in 2021. Also, as a quick reminder, if you want 4 free stocks, make sure to check out the link to the Webull trading platform in the description of this video. The promotional deal will be running until January 15th, and if you want a 5th free stock, there's also a link to Robinhood. If you enjoyed this video, don't forget to drop a like, and if you haven't already, don't forget to join the Moon Gang by hitting the subscribe button. All that support is truly appreciated. Thanks for watching, and until next time, best of luck in the markets.